Traders. Gary Wagner with WFGForex.com, your daily market update for gold, both Forex and COMEX. It is August the 13th, Friday the 13th, and this is our weekend review. Forex gold and COMEX gold both trading nominally higher today, with the COMEX at 1216.40 and the Forex spot at 1214.24. I want to welcome all my subscribers to the new gold forecast. We've changed the name to reflect that we're going to be looking at more than just Forex gold from here into the future. We have changed our platform, and our exclusive platform that we're going to be utilizing is the NinjaTrader platform. It seems to excel so well for exactly what we're going to do. In the next weeks and months, you're going to see, as we build upon these charts, the kind of data and really the beauty of this system. The one thing that I do want to take note, in both markets right now, we do have these dojis forming here in the COMEX and here in the Forex. Of course, after that double-digit day that we had come in the other day, it is, even if the market is going to continue higher, the fact that it has a little bit of breathing room doesn't surprise me. On the other hand, we don't have the follow-through that, in terms of a straight bullish incentive, I would have liked to see. Now, we are above a Fibonacci support line right in here on our Forex, and I'm going to talk about that in a little bit. But in both cases, we have some really strong resistance areas, and that's again off of these tops here. This one around, I would say, 1217 in the Forex, and then in the COMEX over here, right around 1222 to 1223. Those are areas that it does appear, at least tentatively, there's going to be some real resistance in that area. And because we are now in this B wave, this impulse wave, in which I'm looking for the market simply to move up, find a point, as I said before, anywhere between 1210, and I believe the upper hand's going to be on the Forex between about 1231. And the reason that I'm looking at these two areas as potential areas for this B wave to stall or turn into our final corrective C wave is because typically what we look for is the market itself to go roughly 50 to 75% of this A wave. 50% takes us right into here, which also matches very nicely because it's a Fibonacci number in terms of retracement. But then 75%, as I said, takes you right to around 1231, 1234, right in this area here. So first we've got to overcome being able to get above this resistance area that's created by the tops of these particular candles here. If in fact it stalls there, I believe it's still got another leg. In other words, what I would be looking for, if it stalls in that area, really, I believe that it will still play out what I call a 3-count, meaning stall in here, move back down a little bit, and then continue on to the B wave. If it stalls higher than that, though, that might be the end or the termination of our B wave, and we might be moving into our corrective wave. As I said, in the weeks to come, you're going to see just the brilliance of this platform, the NinjaTrader platform. We've added this Doji Star in evening position as a text call out. We want to pay particular attention to that. We have seen significant areas in which it was just a resting area, such as in here. And as the market moved up, we saw this resting area here and a couple other areas. But at the same time, the doji has probably been one of the most significant indicators of tops and bottoms in the gold market. You notice it's right here before it falls. This doji in a three-river morning star position, this almost doji-like candle here. And we can show that we've had significant tops and bottoms with the doji. So whenever I see it, we absolutely want to pay significant attention to it. At the same time, when we look over at the COMEX gold, we have that same sort of a pattern forming. We've got this small doji candle resting in a evening position. Another reason that I am so pleased that we're going to be following both of these charts, as a candlestick technician, because the COMEX has a true open and close, it is going to deliver us patterns that previous with the Forex were just unavailable. We get true gaps. So one of the things that you'll notice is, for example, in this particular bottom of our A wave, we got what is known as a bullish harami. You cannot get that in the COMEX because of the fact that it's fixed. It's a beautiful pattern. This doji that we got here is much more significant, and then the hammer at the bottom. So we had a bullish harami, a doji, a hammer, and then confirmation. Brilliant. At the same time, we did get our signal here, but it gives us that confirmation and will also allow us to see patterns that were previously unavailable to us in just the COMEX market itself. So traders, what am I looking for? Well, the first thing is that we are finding some support in this area because it is trading, as I said, above this critical Fibonacci level right in here. However, we have what I consider to be at about 1229 some superlative resistance, and it's this line here, and it's going to have to take that line out before I believe it could substantially move to that 3132 area. My personal sentiment is if it does not stall in this area and conclude the B wave, or at least go into the first of three legs of a B wave, it's going to find some real resistance right in here at 1229. And why is that? Well, if we look at where that particular line comes from, let me shrink this down, you'll notice that I am drawing that from the original top that we got. This is back in December of 2009 when the market went and tested and made that first historical high right in here. I think that that right now is absolutely a benchmark, and because of that, I think that we're going to see some very strong resistance in that area. Traders, you know, long term, fundamentally, I'm extremely bullish. I think we have been on a bull cycle. As you can see, I've charted this Elliott wave count way back, and through the weeks, we're going to go back and take a look at that. However, focusing with what we want to look at right now, I think that we really want to see how the market is going to react in this area and see what next week wants to bring us. As I said, I do expect to have a lot of resistance right in here, and my sentiment is, and this is longer term in terms of our view, wherever this B line breaks, whether it comes up here and breaks or moves up a little bit higher, I believe that we're going to then have our final C wave down. I'm anticipating that if this market stays as bullish as I believe that it has been fundamentally, that there's a likelihood that we'll get what's called that flat correction. And a flat correction is simply where the bottom of A and the bottom of C are the same. When you get what's called a standard or a zigzag correction, you will go and test and make a lower low. We're far from that point in terms of our forecasting because we're still in our B wave. The key about the C wave, though, is typically in terms of the math that I use to plot the amplitude, it's going to be anywhere between 1 times the length to 2.61 times length. Now, I don't believe we're going to see that kind of a market drawdown. I think that fundamentally the market's too bullish, and my personal sentiment is that somewhere in this area, if in fact we see a flat correction, somewhere in this area is where the final C wave will conclude, and we will go back into our impulse phase. And of course, in our impulse phase, we do have a 5 count that will be going in again, and that's where I think that the market's actually going to come in and make new highs in the same way that we did in this particular impulse phase, which is the last impulse phase that we were in. We will have to see how the market wants to play out next week. It was a most interesting week. We did pull profits on our long trade, although we pulled them much too early. But it reminds me of a story that I've told traders many times. And that is one of the most successful stock traders, a gentleman named Herbert Hoyle, back in the 40s and 50s, was interviewed. and he was asked the following question. The interviewer asked Mr. Hoyle, what does he attribute his success to when he looks at the fact that most traders in the markets lose money? He looked at the interview and simply said, I think it's because I always sell too soon. This has been Gary Wagner with WFGForex.com, wishing you, as always, good trading. Have a great weekend. We'll talk to you next week. Bye-bye.
When I look out my window, many sights to see.